All right, so this is going to be webinar 4 of summer session 2. Um, in terms of summer session 2, we're going to be ending that on September 3rd, I believe, just because of the start of the school year, of course. At the start of this video, I want to talk about technical analysis and the next kind of step that we're going with it. And then after that, I'm going to talk shortly about what's going to be happening with advanced equities going forward. This webinar right now is not going to be live just because of reasons with people's school already being started. So from that, just so you guys know, this is not a live webinar. It is 11:53 p.m. Um, I'm getting ready for school. I know all of you guys are, so that's coming up. So we're just gonna have this as a recording, and this will be uploaded to YouTube, of course. So I'm just gonna get started right away. So where we left off last time with technical analysis, I believe it was some webinar 2 in summer session 1, was we were analyzing charts using candlesticks, right? So we used the candlesticks and we had an understanding that when a green candlestick, when it opens down here and closes up here, that means it created a higher high. So therefore it's green and therefore the stock price has gone up. Now for a red candlestick, it opens at the top and then it closes down here. That means that it fell in price and that's why it's red. A fall in price and because of the lower close than the open. All right, so that's kind of what we covered in that webinar 2. We also covered more specifically the spots of each part of the candlestick, but as long as you have an understanding of that, you should be good going forward. So what I plan to do for this is we have a few little like simulation type things. So what's going to happen is I'm going to use something called an order block. In the previous lesson we used lines, I think, but now we're going to be using order blocks. The order blocks are similar to lines in the case that they show support and resistance. They just show it a little bit better. So I'll show you in a second. All right, so this is the S&P 500. Now remember that since I'm at a 5-minute interval, each of these candlesticks represents 5 minutes in time. Now, if we look, what we're going to be doing is we're going to take this, and from that, we will be charting exactly where the most amount of hits kind of on the supply and demand were during this period. So let's go back a little bit more. Let's see. So we got a lot down here. Looks like there's heavy support down here of some sort because that actually created a new high and then it almost used this area as support on its way back up. So let's check if that falls true. So let's get a few more of these just before I go through that. Let's see. All right, we'll try here too. It's like, yeah, I haven't paid for TradingView in a while, so I don't think I can go back that far. All right, so this area definitely is high levels of support. So let's check that. Let's see if I can get this. There we go. All right. So that area, yeah, definitely. Let's see. So I think that's as far as I can go back right now. So essentially what's happening right now is I'm drawing areas where the stock price, the candlesticks came down to a lot and almost used it as a way to turn around and go back up. So this area around 437, which 438 around, is not actually unusual. So a lot of the times I mentioned this briefly is that intervals like this often have high periods of volatility. So that's actually really common. So a period like 538 is going to have high volatility because it's that even number, right? A 540, it also has the higher volatility because it's an even number, not just an even number, but it doesn't have decimal places. It's just a actual integer. Um, so from that, I'm going to scroll there. I think we can draw a few more of these in too. Let's see. Looks like this is a common area. Um, Let me see. So this is kind of a common area up here. Um, this area, just because of its high level of resistance, it looks like. Also a little bit of support. So let me draw this out real quick. You guys will see like what I'm really talking about momentarily. Just a second. All right, let's see if I can draw this out a little bit more. So now, obviously, this stuff is a little bit, it's people make this stuff up. I learned this stuff from something called ICT in the center trading, I think it was, and that was maybe 2 years ago. Um, I know a lot of people they made quite a bit in things like futures with this. Personally, I never really made anything. I kind of just fell flat. Didn't go up, didn't go down. It is it definitely for the right skill set, for the right mindset too. Mindset is very important. This stuff can work. Uh, Certain trends like this may work for someone that really understands the high speed trading market. I don't have a lot of time as well for high speed trading, so it's a little hard for me. All right. So what I wanted to show though is that since it hit that area here, it also hit it here. So essentially what happens is once we see that it kind of comes down to this level, we almost create this expectation that it may happen again. And it does happen again. It comes down here and then it shoots back up. Now these areas, they're called support. That's support because it's coming down here as support and then boosting itself up. And then we also have an area of resistance during this period. So it seems like that area of resistance was at this around 547 mark. So yeah, around 547, right? And during that period, we had price come up 1, 2, 3, 4 days. 4 days in a row that price came up to and actually went back down from that. And then after that, in the aftermarket, let's see when this was in July 31st, right? There was actual consolidation at that level, which basically signaled that the price could break and could go higher. In that sense, it did. Now, the problem with trading these levels is that let's say that you're trading right here. You're trading at this 547 mark. This is the time of day. But then you think that because all of these levels, because it went up and then it went back down, it went up, back down, went back up, back down, up, back down, up, back down, then what should it do? Obviously, it should go up and back down, except it doesn't. And it doesn't because the stock market is not fully predictable. Let's see if I can get this back up. Sorry, I've been having problems with this chart all day. Just get that back up for you guys. So What I'm emphasizing though is that, let's see, go back over here. I'm not sure why that happened. Sorry about that. So what I'm emphasizing though is that just because it uses this like level as support, or I'm sorry, resistance almost 4 times, doesn't mean it's going to again. And in that case, it didn't. It just broke through the resistance and it went through. And that signals breakout strategy. And that does signal more momentum with the stock price. And it does go a little higher, but it is still hard to enter into these positions and knowing exactly when to close. And that's where people struggle. So definitely be aware of like false movements in the stock price when using technical analysis. It's not perfect. I'd say it works maybe 30-40% of the time. It does show a lot of information though. But we can look also, I'm trying to look for more of these order blocks. We definitely had one down here, which I showed you guys earlier, right? So we had that where it went down to support, but then it actually broke through that support and it went back down. So similar to that break up, instead it broke down and it went back down and it really started to crumble from that. So you can almost start to predict that at certain levels. Also, here we have a little bit of consolidation before it goes back up, so that's common too. And that's just kind of, yeah, I think that's a good introduction to those order blocks. So that was the 5-minute charts. Let's move to the 1-day chart. So now each of these candlesticks will represent 1 day in time. Let's see. And now what's going to happen is we're going to draw these guys. Let's see. I'm trying to look for areas of high levels of like price action. So let's see. We definitely down here, maybe. Yeah, definitely down here. That it seems like I want to say right here. It's hard to say because yeah, I would signal that. Let's see. Maybe an area down here. I just don't see it anywhere else. So these definitely going when the stock starts to move up a lot, like the S&P 500. It gets a little bit harder to predict trends like this. I'm trying to think of like a company that's kind of easier to predict. I know Bank of America consolidates a little bit more. Yeah, you can see some of this consolidation. So you could obviously say that like an order block lies right here. And it does because actually comes down quite a few times there. So it hits those levels, it goes up, and then it goes back down. It goes up, breaks through that actually for a little bit, and then goes back down, goes back up, hits that level, goes back down. So this is Head and Shoulders. Actually, that's one of the things you can draw on TradingView. It's probably one of the most famous little areas that you may find on the chart. You can actually find that right there. It's fairly easy. That's Head and Shoulders. And for that reason, Head and Shoulders signals a downturn, and it did go down. It went down quite a bit. It created a new low down here from that previous previous low over here, but then it went back up. So definitely that's something to worry about is that those trends often work, but then you have to know when to sell. That's the most important part of this technical analysis is knowing when to sell, right? Now, the order blocks also, so what I'd set them to is I'd go back a year worth of data. So it's click the year mark. And then during that year, you have daily marks. So you can mark each spot you think that the daily chart will come back up. Uh, from that, you can look back at those levels while you're trading. So that's kind of how you do that. All right, so I'm just gonna cut it short there. I think that's all I needed to explain. Some of these videos will probably be like remade. I I like to, yeah, it's harder to explain. I wish I had a little bit more for that. Um, it's a confusing topic. It's taken me a lot of videos for sure to like have a really basic, really, well, I would say a really good basic understanding, right? Something that I remember. And I do remember this stuff. It's a little difficult to explain, but that's basically the basics of it. All right, so before I leave, before this webinar is over, I wanted to explain what will be happening to the organization. All right, so first of all, so we now have a new group of members in the group called junior partners. Now, junior partners, we know they were selected based on the people that turned in the most amount of stock reports. So if you weren't selected, that just means you didn't turn in as many as the other members that did receive the junior partner position. Now, in terms of their role, they obviously have the promotion, so they would have more roles. They have to create a YouTube project, which we discussed with them, and then they also are going to start giving you guys feedback in the monthly reports. Now, in terms of monthly reports, I mentioned this in the updates section. Um, Monthly reports are going to start after summer session 2. Now, our plan with monthly reports is that you can choose a sector. We want you to choose a sector because we want you to really specialize in a sector. Now, specializing in a sector is very important because it gives you a really good skill set, right? Firms, big firms, they want someone with a specific skill set in a sector, and that's kind of what we want to give you. So what essentially we're asking is that you choose a sector that you enjoy and that you're willing to do more than one monthly stock report on. Now, if there's something goes wrong and you really hate the sector, you can obviously change it. But we want you to stick with a sector for a while. So that's our plan going forward. Now, in terms of the actual report, it's going to be, we're asking for medium reports again. So medium we were using, right? I know a lot of you guys are signed up with our advanced equities publication, but if you're not, please contact me so I can get you added to that. And then in terms of that, so we'll be using medium primarily, and then also seeking alpha. Seeking alpha, it's a little bit more advanced as I've discussed before. We're still working on our publication to be put on there. And then from there, once we get that publication up, we'll start reporting the best reports we see on advanced equities, and we'll try and get those ones up too. And that will involve working with publishers. So we'll contact you if you were selected to go on to Seeking Alpha. The nonprofit is actually going to be established. It should be established soon. We're working with a new company called Hack Club. They are a little bit easier to get through with than Hack Plus. So we'll be doing that in the coming weeks. All right. And then I think I just said that. Yep. So from there, once we get that up, we'll also be signing up for a website. We'll have a website with a company called Hosting Chair. Um, so Hosting Chair will allow us to host our website once we get the money to do that. Our Instagram account will be created momentarily. We're still doing that. And in terms of that, I think that's it. We are still strictly enforcing that rule about inactivity. So if you're inactive during a summer session, we're going to have to remove you just because of company policy. That's just so we can keep everyone active and we know that everyone's really here. So I think that's going to be it though. So thank you guys for joining this webinar. I know it would have been better if it was live, but it wasn't, so that's all right. But I enjoyed doing this and thank you.